Hey guys, this is Mike Munzing with Munzing Mortgage Group. We've made it through another week. I deeply hope that you had a fantastic Thanksgiving with your friends, with your family, whoever you spent the time with, and we're back to work this week. Hey, I wanted to touch base real quick on the rates for the week. Once again, as always, they are at record lows. The interesting thing of this week was that the bond market was kind of on fire, which normally means the rates would drop a little bit. They have really held their ground where they are, which lets me know that we've hit a bit of a bottom here where I'm not sure if they're going to come down much further, but you can get this rate or this rate sheet over on my website at www.mikemunzing.com. You print that out, you take it to your open house. Hopefully you'll find some buyers. I'd love to work with you on those buyers, but at least it gives you a chance to show them how tremendously low the rates are. That really comes to fruition in their monthly payment and what they can really afford. Okay, once again, I want to jump into Stephen Thomas's report for the week. You can find that at www.reportsonhousing.com. It is a subscription site, so you need to subscribe to Stephen. You get these great reports every other week. He really breaks down the Orange County market into absolute details on every price range, distressed, other types of properties. Just a really tremendous breakdown that you can talk to your buyers, you can talk to your sellers, and you really come off knowing exactly what's going on in the market. We are really looking at three distinctly different markets right now. As you know, with the housing availability really low, we've got a very hot market in the $750,000 price range and below. Those are 57% of the listings are under $750,000. But in the demand, we've got about 82% of the demand, which is amazing. That leaves us with only 18% of the demand for all other properties above 750. Now, the time on market for the homes under 750,000 is only 24 days. So those properties are flying off the market. That's also creating a very frustrating market for our buyers as they're putting in multiple offers. They're trying to get these homes, and it is quite difficult. I want to take a look at a chart here real quick. It is very much of interest, and that one, the number I highlighted in yellow here with the red arrows, are 1 year ago, homes at less than 750,000 were at 6,879 properties exactly a year ago. Right now, they're at 1,993 properties, which obviously is a huge, huge drop. So once again, after the New Year's, we need to get out there and get more listings. We've got to get more homes for these buyers to buy. It's getting quite critical. Let's take a quick look at actual inventory. We know it's horrifically low. We know it's dropped. It is at 3,534 homes. It is down 219 homes from just 2 weeks ago. I think about a month ago, we were still over 4,000 homes. We've now dropped to in the 3,500 range. And now that brings us to overall demand. That has also dropped. I think a lot of our buyers are realizing that there are not that many homes available, so they've backed off a bit. Let's hope we get a nice flurry into the new year. And also for the distress market, that has also dropped. Now I want to point out on that distress market, a chart here, that you can see over on the right side of this chart, it has just tumbled over the last number of months. That is a really, really tough scenario to trying to get folks who want to buy those short sales, who want to buy the foreclosures. That market is just really evaporating right in front of our eyes. Okay, what's hot in the news right now, we can't get away from it, the Fiscal Cliff. Oh my goodness, they're talking about it everywhere. I'm not a big fan of that. I think it's bogus, so we talked a lot about that kind of issue before. But today I saw that my old friends Brian and Frank did a great job with their video. Here's their take on it.
And of course, the latest stupid overused term, the Fiscal Cliff. I am so sick of hearing that, it makes me want to jump off a cliff.
Anyway, we gotta bring up the Fiscal Cliff because it could affect your job.
Well, how about this part of the Fiscal Cliff? The homeowner's tax deduction that, by the way, has been around for 100 years, if you can believe that. It's got its neck squarely over the chopping block. How do you feel about that?
Well, according to Lawrence Yun, the chief economist at NAR, he said with respect to losing the tax deduction that, and I quote, "This is a bunch of crap. And anyone in Congress who votes to eliminate the deduction should be hung by their toes and beat with a bicycle inner tube full of sand that's painted with honey and covered in broken glass."
He didn't say that. Well, he should have. What Larry and Nard did say was completely eliminating the tax deduction would lead to a 15% total loss in home equity.
Yeah, but then he said, "This is a bunch of..." Further, according to the National Association of Realtors, the sale of 2 homes creates 1 job, as the new homeowner is going to be in the market for improvements, appliances, and services.
And losing the tax deduction, according to NAR, would slow sales by 10 to 15%, which would mean a loss of 250 to 300,000 jobs over the year.
Yeah, but if their numbers are right, with 4.25 million homes sold in the slow year of 2011, the number of jobs lost would be even greater than their estimates.
And not to mention the impact on you realtors out there. A 10 to 15% loss in your income, theoretically, which will make it much harder for you to afford that snazzy new bouffant hairdo, leopard print professional garb, Italian charm bracelets, sweaters for your schnauzers, Mary Kay, and for some of you, Mona V. Contact your congressperson and tell them not to negotiate on our long-held homeowners tax exemption.
Okay, they covered a couple of different issues. Obviously, the fiscal cliff and how it might apply to getting rid of that mortgage deduction. That would be horrific for me personally, for you personally, for our buyers. There would be unintended consequences from that we have no idea of, and it could really, really hurt our market. Well, that being said, we've got a great weekend coming up. Hopefully it won't be too wet and rainy, but I will be working. I'm here for you. Please give me a call. I'd love to work with you, with your new buyers. I'll be here to take your call. Call me at 949-689-5626. Let's work together. We've got an exciting new year ahead. 2013 is just around the corner. So God bless you. God bless your family. God bless our market. God bless America. Let's work together. Bye-bye.
Money.